Well, hello, good morning. You're watching Market Cafe with me, Snehisha, and with me is Shreyansi Singh. And well, of course, you're watching ET now. Thanks so much for starting your morning with us. Now, this is a show where we'll take you through all the important news and updates that trickled in overnight as well as from the domestic markets while we were fast asleep last night, and we'll prepare you for today's trading session as well. In the second half of the show, we'll tell you the stocks that potential buzzers in today's trading session, as well as what brokerages are flagging off for us bright and early this morning. But with that, let's kickstart the show then. And Shreyansi, take us through what's happening on Wall Street. S&P and Nasdaq have seemed to see a slight bit of recovery, but can't say the same for Dow Jones, is it?
Absolutely. Well, largely lackluster moves though, nothing like what we've seen recently for Wall Street. But when I'm looking at futures then tied to the 30 stock Dow, I'm seeing a rise of 0.1% thereabout. S&P 500 futures also gained 0.2%, and Nasdaq futures also gained 0.3%. But when I'm looking at the main trading session then, the Dow slipped 0.1% to post a 3-day negative streak. Meanwhile, when I'm looking at S&P 500 as well as Nasdaq Composite, both of these indices inched up 0.1% and 0.2% respectively. Investors fears that the Federal Reserve may keep rates higher longer weighed on stocks. So Fed Chairman Jerome Powell said that policymakers will need more proof that inflation is moving toward the central bank's 2% target, a target that they talked about time and again, Powell and other officials as well, before rates can come down. More on that later, but in addition, there was also data coming in that companies added 184,000 workers in March according to the ADP. The result trounced Dow Jones' estimate of 155,000 and spurred investors' fears that rates may indeed stay higher longer. Now, when I'm looking at the 10-year Treasury yield then, that briefly topped 4.4% and touched a high for 2024. On the economic front then, investors will be looking to initial jobless claims numbers for the week ending March 30th. And that's, like we've highlighted earlier this week as well, that is a key data set coming in. The US trade deficit as of February will also be released Thursday morning. All eyes are on Friday for the release of March's non-farm payrolls, like I mentioned. And well, let's take a look at Europe then. European bosses ended in the green with Germany's DAX up 0.5%. France's CAC 40 also up 0.3%. So that's the kind of handover that we're seeing coming in. But it's gold that is glittering bright and early this morning, Steve.
Well, absolutely. While equity markets globally are a little dilly-dally, gold is the one that is breaking through and touching record highs for consecutive sessions. Now, back-to-back record highs coming in for gold this week, because gold prices have raised to yet another record high yesterday after the Fed Reserve Chair Jerome Powell reiterated that recent readings on job gains and higher than expected inflation do not materially change the overall picture of economic policy this year. Spot gold rose 0.5% to $2,292.3 per ounce after hitting a record high of $2,294.9, which is almost $2,295 per ounce earlier in the session. Investors still expect a first rate cut at the Fed's June 11 to 12 policy meeting. All eyes will definitely be on that meeting. Even a stronger recent economic data has sown investor doubts about the outcome. Now, gold, which is a hedge against inflation and a safe haven during a time of political and economic uncertainty, has climbed over 11% so far only this year. So on a year-to-date basis, just in the last 3 months that we've seen, gold is already up 11%, helped by a strong central bank buying and safe haven as well. But well, those were the moves on gold. Let's shift focus. Let's talk about what's happening in the world of oil, because rather interesting moves coming in over here. And when you take a look at what crude oil did, it clung to recent gains as mounting geopolitical tensions and OPEC plus policy lifted prices. What's very interesting to know is WTI crude is now above $85 per barrel. It's at 85.7, up 0.3% as I speak. And Brent on the other side is dangerously close to that $90 per barrel mark, right now at 89.6, up 0.3% as well. Now, some members of OPEC and allies led by Russia, called the OPEC Plus, are voluntarily 2.2 million barrels per day of production through at least the second quarter. Now, the group's Joint Ministerial Monitoring Committee concluded a meeting yesterday without recommending changes to OPEC Plus and the current production policy. So we'll see how that pans out and what this group comes up with when it comes to the outlook on supply and how many barrels they plan to release and for how long they intend to keep production cut policy in place. So we will be watching out for all of these developments, but it's very interesting moves coming in on oil and Brent crude dangerously close to 90 as we speak, Shreyansi.
Absolutely. And moving on then, the big story this morning, like we talked about earlier as well, commentary coming in from Fed Chair Powell. And he reiterates once again that it will take time for the policymakers to evaluate the current state of inflation, speaking specifically about the hotter than expected pricing pressures. The central bank chief said he and his fellow officials are in no rush to ease monetary policy. The remarks come 2 weeks after the rate-setting FOMC again voted to hold benchmark short-term borrowing rates steady. Remember, other Fed officials speaking this week have made remarks consistent with the central bank's patient approach. Powell reiterated that decisions are being made meeting by meeting and noted only that rate cuts are likely to be appropriate at some point this year. So that's the key commentary coming in from him.
Well, absolutely. And while we're talking about central bank action, back home, the RBI's two-day MPC meeting is underway. This is the first meeting of FY25. Remember, it's the last one before India heads to the polls. And the street expects the central bank to maintain status quo. Let's go across to my colleague Gaurav, who's joining us to tell us what's more in store, what we can expect from this meeting, and what largely the street is penciling in when it comes to this MPC meeting. Gaurav, take it away.
Talking about Monetary Policy Committee's meeting, RBI has kept its focus on three main factors. And first, if we talk about growth, we have already seen a big surprise which came up in the quarter gone by. And if we talk about the high frequency data in this quarter also, it shows rebound in the consumption activities, which means that street is expecting the growth to remain robust in this quarter also. If we talk about inflation now, RBI may reiterate its stance on bringing inflation back to 4% levels. But if we look at data in the Jan and February so far, it was at 5.1%, and now street is expecting headline inflation to remain above 5% in first half of CY24 also, and this will be because of the high food inflation, which is a key monitorable for the committee going ahead. If we talk about liquidity also, we have seen interbank liquidity turning into a surplus in the month of March, as it was in the deficit since September 23, and we may see short-term volatility in this sector as well. And on back of all these factors, now street is expecting RBI to remain steady on the policy. They're expecting status quo on rates. That means the rates are expected to remain at 6.5%. They expect RBI's stance to remain at withdrawal of accommodation from here on as well. And we may see 2 rate cuts in the year itself in 2024, and first rate cut may start in August 24 as per street's expectation. Obviously, there are some risks. For example, global factors and domestic factors will affect these entire rate cut scenario. But all in all, we will definitely keep an eye on how RBI sees these risks and how they go ahead with the rate cuts coming ahead.
Well, thanks Gaurav for that analysis. So that is what is being penciled in for RBI's MPC. But let's keep it going with macro data then. Inflation in the 20-nation Eurozone eased to 2.4%, below the expected 2.6%. And hitting a 4-month low, further solidifying expectations of monetary policy easing by the European Central Bank in the upcoming months. Meanwhile, core inflation rate, excluding volatile food and energy items, decreased from 3.1% to 2.9%, hitting a 2-year low.
Well, let's shift focus from Eurozone to the US, and private sector employment has increased by 184,000 and annual pay by 5.1% in March as per Automatic Data Processing Report, which is the ADP report. Remember, this data was surprising not just for the pay gains, but the sectors that recorded them. The 3 biggest increases for job changers were in construction, financial services and manufacturing. This also is the largest addition since July, and the higher than expected 148k new private jobs.
Moving on then, Amazon's cloud computing division is laying off hundreds of employees in its physical stores, technology and sales and marketing units. Company's lucrative AWS unit has seen its sales growth decelerate in recent quarters as companies trimmed their cloud spend amid rising interest rates. Company also decided to make cuts to the store technology division as a result of a broader strategic shift in the use of some applications in Amazon's own as well as in third-party stores.
Well, let's shift focus and talk a little bit about the weather and what this summer is going to look like and what the government is doing about it. Health Minister Mansukh Mandavia recently chaired a meeting to assess the preparedness for the extreme extreme heat waves that have been predicted to hit India this summer. This comes after the IMD warned of above normal temperatures this summer season and about 10 to 20 days of heat waves instead of the regular 4 to 8 days. The minister emphasized on the need for a central database to easily share data like number of deaths, number of cases and so on.
Tell you what, let's also keep it going with this thread because Dr. Jay Khuller, consultant at Internal Medicine, Sehgal Neo Hospital, as well as Jayesh Lele, Chairman IMD National Health Scheme, also talks about the advisories issued by the Health Ministry in light of severe heat wave predictions. So let's listen into what they also had to say.
We are anticipating, we are preempting, and we are being proactive. So education of the general population is the main thing, which is the main space work which we need to do to avoid fatalities. 2021, I think there were around 524 fatalities, and then it went down the previous year, which was 2022. And I have also gone through the advisory. I think it is a very well put advisory. It gives clear do's and don'ts for the general population. It gives do's and don'ts for the people at higher risk of developing heat-related illnesses. It defines what heat-related illnesses are and the worst form of heat-related illness, which is heat stroke. It defines when to reach out for medical help, what are the red flag signs that one needs to consider, and how to go about it and how to prevent it.
Definitely, first thing, the awareness amongst the patients, guidance among the patient, and they had put up at all the places, especially the corners, the fluid intake, especially the water intake, electoral kind of a powders, ORS solutions, and at the same time kind of a juicy fruit juices and other thing, which ultimately have reduced the intensity, death rate, and even the heat stroke was reduced to great extent in the particular city. So the plan need to be exercised in all the areas wherever the temperature starts rising.
Well, that's some caution coming in when it comes to the summers we can expect this year, and we all need to be very, very careful to deal with the summers. But well, that's quite on the negative side, but we also have some positive news for you when it comes to summers because it's sweltering hot outside. But there's one thing to savor during summers, and that is mangoes. Now, mangoes are here, and the good news is that prices haven't surged despite the fall in production for the start of summer. However, traders are expecting prices to gradually rise, and here's a special report by my colleague Astha Chopra on mangoes and their pricing.
As the summer season unfolds, mango lovers in Mumbai find themselves facing a bittersweet reality. The king of fruits has made its annual appearance this year. The APMC markets are witnessing a scarcity of mangoes, leaving consumers scrambling to secure their favorite varieties. With demand surging beyond last year's level, the production has taken a substantial hit, plummeting by 40%. Unseasonal rains and adverse weather conditions have wreaked havoc on mango orchards, resulting in widespread crop damage and diminishing yield. Consequently, the shelves are adorned with fewer mangoes, compelling consumers to pre-book their converted fruit at prices ranging from Rs 800 to Rs 1800.
इस साल अर्ली सीजन आने की वजह से मैंगो अलग अलग स्टेजेस हो गए, इसलिए इस साल मार्केट में ऐसा फ्लड मैंगो का नहीं दिखेगा, लिमिटेड अराइवल दिखेगा। यही माल 1200-1400 रुपए से लेकर 1500-1600-1800 रुपए डजन के हिसाब से बिकता है। बड़ा अराइवल आई है, उसका 40% माल जो वो एक्सपोर्ट में जाता है।
While traders strive to meet the soaring demand, the farmers also states decline in the mango output, attributing to its erratic rainfall patterns and a shortage of manpower. Once boasting a yield of 50,000 mangoes per acre, farms are now yielding a mere 25,000 to 20,000 mangoes per acre.
There's a lot of demand here, and the good quality mangoes are sold in the morning only. So we have to book previous. If you want those mangoes, you have to book previous days.
Despite Mumbai's less production, about 40% of the total produce are exported to international shores, catering to markets in Europe, the Gulf countries, New Zealand, the USA, Singapore and Malaysia, with prices set to surge in the coming weeks. Post 15th of April, consumers brace themselves for further strain on their wallets, while grappling with concerns over perceived decline in the mango quality. Traders says that this year the markets will not be flooded with mangoes, but with limited fruit in the market and high demand. Prices of mangoes may give consumer a bitter taste. Also, according to the traders and farmers, the demand will be keep on increasing at the end of the April and May, and maybe the production, if the weather remains good, the production will improve and will be fulfilling the needs of the people.
Well, thanks Asta for that roundup. Now Snehi, I think that's making my stomach grumble with hunger early in the morning.
Very early in the morning to be thinking about mango, Shreyansi. But imagine it's only April and mango demand has already, surpassed last year. I can't even wait to see what happens in May when it's peak mango season, and June. And if mangoes are already so sweet, and I can't imagine what it's going to be like.
But I'm worried
in May.
about what the customer said, because she said all the good mangoes are taken early in the morning. Just like, oh.
Well, after the show, I think I'm going to
missing out.
rush to the market and you better come along and let's go and pick our mangoes for the day. But with that, viewers, we're going to slip into a short break on this edition of Market Cafe. When we return, we'll take a look at how the Asian markets have opened up. So you stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at what the Asian markets are doing then. And Asia Pacific markets rebounded following a sell-off in the previous session as investors digest comments coming in from US Fed Chair Jerome Powell. Now, markets in Hong Kong, mainland China and Taiwan are closed for a public holiday, but let's see what Nikkei is doing this morning. So Japan's Nikkei is definitely in the red. Let's see if we can get the chart up on your screen as well, and it's up 1.6% currently, hovering near the 40,000 mark as we speak. Moving on then, South Korea's Kospi as well in the green, decidedly higher and up about 1%, powered by expectations that heavyweight Samsung Electronics will post a near 9% increase in its first quarter profit from a year earlier. So Samsung shares climbed 1.5% on its open, and South Korea's Kospi is up nearly 1% on your screens. Now let's take a look at Australia's ASX 200 as well. That also rose 0.5% after clocking losses for 2 straight days. So a solid start to the day for the Asian markets. And yesterday, back home where we closed at is 22,434. That is the level that we closed at, and both on a spot and futures basis, we're looking at a good start. So on a spot basis, we're looking at a solid gap up open, and even on a futures basis, not a bad start at all. We're looking at quite a good start and a start in the green as of right now, Snehi.
Well, absolutely. So, good start indicated for us. Let's see where our markets pick from there, and how today's trading session pans out. But here's the lineup that we have for you on the market today, full of important market guests and managements. At 9:20, we will begin with Ajay Srivastav, CEO of Dimension Corporate Finance, and he'll be here to talk about how he's navigating the markets right now, the themes that he's liking, and the sectors that he's betting on. At 9:30, followed by that, we will be joined by Ravi Pandit, the chairman of KPIT Technologies, and it's a very interesting disco that we are going to have a discussion. How are EVs transforming the transportation sector right now? So on that, we'll be joined by the management of KPIT Technologies, JBM Auto, as well as Neogen Chemicals as well. Moving on then, at 10 o'clock, on the back of for operational updates, we will be joined by the management of JK Bank. MD CEO Baldev Prakash will be joining us of J&K Bank, Jammu and Kashmir Bank. Lastly, at 10:20, then we'll be having a very interesting discussion with the Indranil Sen Gupta, economist and head of research at CLSA India, on what we can expect from this MPC rate outcome that we will be getting tomorrow, and what should be the factors that we should be watching out for and penciling in for. So, very important market guests and a very interesting discussion also lined up for you. So, you stay tuned to ET Now the entire day.
Absolutely, and lots of interesting discussions to keep an eye on.
Hi there, welcome back. You're still watching Market Cafe on ET Now. Now, some harrowing news coming in for the Indian rupee, because the Indian rupee closed at a record low of 83.435 rupees against the US dollar. It was under pressure after increasing dollar demand, and my colleague Gaurav Jawal is joining us once more with more details on this. Gaurav, hi, thanks so much for joining us again this morning. Help us understand what this move is.
Well, yes, talking about Indian rupee, as you said, it has hit its record low level. And if you look at the other currencies as well, most of the Asian currencies also recorded some low levels in today's day. So, for example, if you talk about Thai currency, it was down almost 0.3%. Chinese currency was also almost 0.1%. Now, talking specifically about rupee, it closed at 0.435% level, which was down 0.06% versus its previous session. And we have recently seen a historical low of 83.45%. 83.45 rupees recorded by Indian rupee in the on last Wednesday. So what is the reason, if you ask, is that as per sources, basically dollar demand from importers, specifically from local oil companies, were actually strong. In fact, they also stated that foreign banks actually offered dollar in the latter half of the session, which limited the losses that we have seen in rupee so far. So what we have already seen is that last week we saw exchange traded options were for INR were down because the broker asked to submit proof of underlying exposure of their derivative contract, or rather unwind the existing position. And after that this is coming up. Now, given the ongoing strength of dollar that we have seen and elevated crude prices, according to Mr. Arnob Biswas, who is actually head of foreign exchange research at SMC Global Securities, he that rupee may see some kind of pressure in the near future again. And coming back to numbers, if you look at the dollar index again, it was up 3.3% in 2024 so far. Brent crude is also at a record high level of $89.21 per barrel. And with this, investors may be waiting for some kind of commentary coming up from the US Fed chair, which will some kind of potential timing on interest rate cuts. But all in all, rupee is currently facing some kind of weaknesses, and we will definitely keep an eye on rupee as how it trades, and we will definitely also look for any kind of support if RBI is providing on the rupee, as now it has reached to the record low levels.
All right, thanks Gaurav for that update coming in. We'll see how the day pans out for the rupee. But moving on then, amid concerns, Vistara CEO addressed the pilots, cabin crew and airline staff. He acknowledged issues related to rostering. He said flight operations are likely to stabilize by next week and roster will be revised from May. My colleague Sameer Dikshit filed this report earlier. Take a look.
Vistara CEO addressed the pilots and the cabin crew. This meeting went on for about 30 minutes and he acknowledged that there is a rostering issue and that will be resolved soon. He also assured all the pilots that they are going to stretch back the network operations, which led to the extreme working conditions for pilot as well as for the cabin crew. It has been highlighted that Vistara is going to reduce the number of flights on domestic as well as on the international sector. And also it has been mentioned that whatever the financial issues have been raised, that will also be looked upon. As of now, rostering is the main issue, and that has been assured that the rostering part will be addressed, and the new rostering structure is likely to come into effect from May and onwards. So rostering was one of the issues. In addition to this, Vistara CEO also dismissed the point that the mass disruption in flight was due to the sick leave. He mentioned that in the month of March, usually a good number of pilots sick disruption, but largely it has been mentioned that the flight will resume to normalcy by next week.
All right, Sameer, thanks for all of those details. Let's get a move on then. And geopolitical instability has given rise to yet another race for arms, which cannot be avoided by any country. Now, India, facing threat from multiple frontiers, is also on a modernization drive. There is a major transformation for India's defense sector, from import independence to made in India and exporting to the world. My colleague Sumit Chaturvedi is joining to explain this paradigm shift in India's defense sector. Sumit, good morning.
The continuing Russia-Ukraine war has underscored the need for nations to be better equipped. While the old war technologies and techniques are still relevant, the recent conflicts have shown a completely new face of the new age warfare. Given the challenges, India is also on an overdrive to equip its armed forces with the latest technologies. The quest that began with Atmanirbhar Bharat has now moved to the advanced stage, from being a buyer to becoming a global arms seller.
कभी भारत दुनिया का सबसे बड़ा डिफेंस इंपोर्टर हुआ करता था, आज भारत डिफेंस सेक्टर में भी एक बड़ा निर्यातक बनता जा रहा है। आज भारत का डिफेंस एक्सपोर्ट 2014 की तुलना में 8 गुना से ज्यादा बढ़ चुका है।
सैफ्रॉन वो भी इंजन बनाता है, यूके, इन सब सारी कंट्रीज में भी जो इंजन बन रहे हैं, कौन से ऐसे इंजन हैं जो कि वो भारत में बनाए जा सकते हैं? कौन कंट्री टेक्नोलॉजी ट्रांसफर करने के लिए तैयार है? तो यह सब सारी हमारी बातें चल रही हैं और सारी पॉसिबिलिटीज को हम एक्सप्लोर कर रहे हैं, क्योंकि इंजन तो हम भारत में ही बनाना चाहते हैं। बहुत हो गया इंजन एक्सपोर्ट करते हुए, इंजन में भी अब भारत को एक्सपोर्टर कंट्री बनाना चाहते हैं।
India is selling to the world. HAL developed light combat aircraft Tejas, missiles including BrahMos, long-range artillery guns, multi-barrel rocket launchers, tanks, advanced radars, sensors and electronic warfare equipment, and even interceptor boats. India supplies weapons and equipment to almost 100 countries, including Italy, the US, UK, France, the Maldives, Russia, Sri Lanka, the UAE, the Philippines, Saudi Arabia, Poland, Egypt, Israel, Spain, Chile, Mauritius and Seychelles. India's defense exports have now reached an all-time high mark of 21,083 crore rupees in FY24, registering a 32.5% growth. Around 60% of the exports have been carried out by the private sector. India has set a target of exporting defense products worth 35,000 crore rupees in FY25. Looking at India's potential, the global arms manufacturers are setting up a base in India. While the Swedish arms major Saab recently announced the first 100% FDI project to manufacture the Carl Gustav M4 rocket system, and recently defense major Israel Aerospace Industries has also opened an Indian subsidiary.
Well, we are already working with the tens and tens of manufacturers, local manufacturers in India. We are thinking to invest in our own production and manufacturing facilities. ASI, the company I run, already opened 5 locations across India.
As India is on a modernization drive for the armed forces, it continues to hold the title of the world's largest arms importer, though the overall arms imports have declined 11% between 2013 to 2017 and 2018 to 2022.
The ascendance of India in the global market of defense manufacturing is clearly hard to miss. India is making weapons not just for itself but for the other markets. The recent Russia-Ukraine war has shown the fragility of supply chain as well, and in that context it is important India should have its own weapons ecosystem. Sumit Chaturvedi, ET Now, New Delhi.
Well, thanks Sumit for that lowdown on India's defense industry. Then moving on to Motown, Toyota has launched its Fronx counterpart Taser starting at 7.4 lakhs. Ex-showroom, the model is at least 22,000 rupees more expensive than Maruti's Fronx. The bookings for Toyota Taser have already begun and deliveries will begin in May. My colleague Aishwarya Patil caught up with the management. Listen in to a slice of that chat.
Booking starts from now, and the customers can book with the entry fee of 11,000 rupees, and the deliveries will start from the month of May. To be very specific, numbers we don't share because we don't run behind numbers. Our first target is to launch this product successfully across the country and then engage with a lot of new customers who are welcoming into our Toyota family.
If you could also give us a sense and view of what are the goals for Toyota? What is the focus going to be like? Especially, this is the compact SUV segment which will mark Toyota's entry in this particular segment, sub 4 meters, if I say. So, going forward for the rest of the year and for 2025, what is the goal?
We already have our local manufacturing of engines, and our sourcing for transmissions, etc., is also local. Just a while back, we also announced the new plant with a capacity of 100,000, an additional investment around 3,300 crore rupees. So that is going to substantially add, capacity, and it will come online in 2026. and that will give us flexibility to manufacture the product that the customer is desirous of. And in an evolving market, we'll be able to have enough flexibility to able to deliver the product that the customer really needs.
So the output will go up to how much, if I may ask?
Yeah. So our units right now is around 345,000 units per year, and that's going to jump to 445,000 units per year.
Alright, well, exciting new launch and more addition in India's Motown market. But viewers, with that, we'll slip into a very short break on this edition of Market Cafe. We'll be right back with more stock-specific news and updates and stocks that could be potential buzzers in today's trading session. So you stay tuned. Hi there, welcome back. You're still tuned into Market Cafe. Let's take a look at what brokerages are flagging off this morning. And well, we have three notes coming in on one particular stock this morning, which is Federal Bank, and that is largely going to remain in focus on the back of these brokerage notes. Now, what's key to note is three different brokerages, three different stances and three different strategies and target prices coming in. Citi has maintained a sell stance with a target of 130. Morgan Stanley has maintained an equal weight with a target of 165, and Nomura has maintained a buy rating with a target of 190. So lots of difference across these brokerage notes. Let me take you through each of them and the rationale behind them. When we start by looking at Citi's view, they say that the advances have picked up, the growth in advances has picked up, deposit growth is higher than expected, NIM trajectory will be the key factor to watch out for going ahead, and earnings they expect to be impacted by the wage revision that the company has undergone. So while that is largely Citi's when it comes to Federal Bank. Moving on, let's also see Morgan Stanley's view when it comes to Federal Bank then, and they've maintained an equal weight rating with a target price of 165 rupees. They're also saying that loan growth and customer deposits have performed well. The gross loan growth has been at 5.1% for a quarter-on-quarter basis, compared to that 3.3% growth that they did log in last quarter. They're saying deposit growth was healthy, and that was led by some strong term deposit growth as well. However, they say that CASA deposit growth remained subdued when they talk about last quarter's performance. So all eyes will actually be on how Federal Bank performs in the fourth quarter. Lastly, let's also look by Nomura's note that is coming in on Federal Bank, because they have maintained a buy with a target price of 190 rupees. They're saying that pre-quarter 4 update, they expect strong loan and deposit growth going ahead. They are also keenly watching out for the company's quarter 4 results as well. They expect NIMs to be stable sequentially, and they're saying that the strong fee income growth will sustain. Quality, they say, will continue to remain benign as well. And on the other hand, what's surprising to know is it remains Nomura's preferred mid-cap bet idea, when on the other hand, Citi has generated a sell stance. So they've actually gone ahead and maintained their sell stance on Federal Bank. So quite conflicting brokerage notes coming in on one particular stock. So that's very interesting to look at, Shreya.
Absolutely, and let's see how that pans out for Federal Bank then. But moving on, let's also take a look at how the futures and options roundup is shaping up like. And Ansh is joining us with that snapshot.
Right, so starting with Nifty first, in the previous session, Nifty actually started below 22,400, went about 22,500, but saw some correction to close almost flat by giving a correction of around 72 points. So this 22,500, 535.50 level has been acting as a strong resistance from last 1 month actually. We have seen 5 instances when Nifty has corrected from this range. So Nifty needs to give a close above this 22,550 level to be on a positive front. On option, we are seeing call writing happening at 22,500, followed by 22,800 as well, indicating strong resistance around this level. Also today we have option weekly expiry, so we may see some volatility into the market. Moving on to Nifty Bank. As you can see in the chart as well, Nifty Bank has been taking strong resistance at that 47,700 mark from last 3 sessions. But the good part is, in the previous session, the index didn't from that level and it closed exactly around that level only, showing good pressure in the index. On option front, we are seeing call writing happening at the psychological mark of 48,000 level, indicating option traders are not expecting Nifty Bank to go above this level, whereas on downside we are seeing put writing happening at 47,500, indicating good support on this level. Moving on to what FIS did in the previous session, index future, they covered 2,100 long contract, they added around 14,200 short contract. So net to net we are seeing addition of around 16,000 300 contracts on downside, due to which the total long position has slipped lower from 46.8% to 43.8%, showing their cautious stance into the market. So in a nutshell, Nifty needs to give a decisive close above that 22,550 level and Nifty Bank above that 47,700 to be on a bullish front.
All right, thanks so much, Ansh, for taking us through what we can expect the derivative snapshot to look like today. But among other companies that have come out with their Q4 provisional updates, RBL Bank, Suryodaya Small Finance Bank and L&T Finance Poonawalla FinCorp will be among those in focus. Let's go across to Ashesha for all of those details on the Q4 updates. Ashesha, good morning.
Well, yes, a whole host of banking and financial services companies that have reported operational data for the quarter gone by. And first up, let's talk about RBL Bank, where the data was rather strong. Disbursements or rather advances seen an uptick of about 19% on a year-on-year basis, and deposits too have seen a growth of about 22% on a year-on-year basis. CASA has improved by about 140 basis points on a sequential basis. All in all, operational data from RBL Bank. Keep an eye out on this counter. Moving on to Suryodaya Small Finance Bank, then over here also operational data was strong, where disbursements for the full year FY24 have seen a solid uptick of 36% on a year-on-year basis. And for the quarter gone by, gross advances rose 41% YOY. Deposits meanwhile saw an uptick of a whopping 50% on a year-on-year basis. CASA ratio improved to 20.1%, sequential improvement of about 160 basis points. So very strong data. Keep an eye out on Suryodaya Small Finance Bank as well. Moving on to L&T Finance then, where operational data was in line with what the street was working with, where retail disbursements for the fourth quarter rose by about 33% on a year-on-year basis, and retail loan book at the end of fourth quarter stood at about 80,000 crores, indicating an uptick of about 31% on a year-on-year basis. Lastly, Poonawalla FinCorp, again another set of strong operational data for the quarter gone by, where disbursements for the fourth quarter were highest ever at about 9,700 crores, which is an uptick of 52% on a year-on-year basis and about 10% on a sequential basis. And AUM too saw a solid growth of 54% on a year-on-year basis. So strong operational data from Poonawalla FinCorp. Keep an eye out on this counter as well.
All right, thanks Ashesha. So we'll keep an eye on all of those counters on account of their Q4 updates. But which are the stocks that we should keep on our radar on account of news flow then?
Vodafone Idea will be the first one. You remember yesterday during market hours, the company informed the exchanges that the shareholders had approved fundraise to the tune of 20,000 crores, and now we have an update where the board will be meeting on the 6th of April to consider raising plans via preferential issue to the tune of 2,075 crores. So Vodafone Idea in focus on the back of their fundraising plans. Moving on to KEC International then, where the company has won orders to the tune of 850 crores, both in the Indian domestic market as well as in the overseas market across businesses. So strong news flow that has come in with respect to order wins, and KEC International in focus on the back of this. Moving on to Brigade Group then, where the company has signed a joint development agreement for an office space in Bengaluru with a development area or value of about 340 crores. Real estate stocks have been in focus for the last many trading sessions. Keep an eye out on Brigade Enterprises on the back of this 340 crore joint venture that the company has entered into. Moving on to GE Power then, this is also on the back order win, where the company said that they've won orders worth about 775 crores from Jaiprakash Power Ventures. And lastly, Vedanta, some capacity expansion plans coming in over here, where the company said that it has expanded aluminium capacity to about 3.5 million tons per annum. They've expanded this time by 1.5 MTPA, and this is a part of the larger scheme of things to increase their capacity to 3.5 MTPA. So on the back of these capacity expansion plans that have come in with respect to their aluminium segment, keep an eye out on Vedanta as well.
All right, Ashesha, thanks so much for taking us through that. But a very interesting note coming here, because Nuvama has conducted an early analysis for changes to the AMFI market cap classification. Now, the Association of Mutual Funds will provide its list of semi-annual rejig in the coming 3 months. So, which stocks are expected to get upgraded or downgraded? My colleague Sharad is joining in with that list and with all of those details. Sharad, good morning. Take it away.
Well, important AMFI classification is expected for the second half of calendar year 2024, and do remember that the announcement is expected to happen in the first week of July. Changes expected to effective from August 1 as per Nuvama. There are certain changes happening, and let's look at the category changes from mid cap to large cap expected. That Zydus Life, Marico, Hero MotoCorp, NHPC, and even Bosch and JSW Energy would be migrating. And do remember, this is as per the market cap rules. Also from small cap to mid cap, there are certain stocks are there which would be in focus, such as MRPL, Hoodco, IRB Infra, Global Health, Tata Investment, BSC, NLC India, Bharat Dynamics, and also Nalco is coming up to the list along with Hitachi and Hindustan Copper. In the list also from large cap to mid cap, there are certain stocks which should be in focus, which might see a change in the categorization. That includes Marico, Berger Paints, SBI Cards, SR, and also Polycab.
Right, thanks Sharad for that update coming in on the AMFI reject then. But that's all the time we have on this edition of Market Cafe. From me, Shreyansi Singh, Snehi Shah, as well as the entire team that put this show together. Thank you so much for watching. But you don't go anywhere as the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.